Now, while they are setting the stage for the next panel, I would like to actually call on stage the next panelists, which will further discuss the idea of stablecoins, but also looking at euro stablecoins, something that obviously became quite an important topic in the whole MiCA negotiations. So let's really looking forward to find out what our panelists have to say about that. And just as another information for everybody, we are going to have another coffee break after this panel. So bear with us for 30 more minutes. I know you're all waiting to get a nice coffee. And please remember to engage on social media. Use our hashtag BC4EU Summit 2022. Engage with our post if you can. And the speaker just left the phone. One of the speakers? There we go. Big round of applause. We found the owner of the phone.
Basically.
I'm so sorry.
Welcome to you all. My name's Jack Schickler. I'm a regulatory reporter at CoinDesk. And after that fascinating discussion about public sector central bank issued digital currencies, we are now looking at one of the other potential use cases of virtual money, which is the stablecoin, which we've already heard a bit about today. And it's been a big year for stablecoins because we saw the collapse of one very prominent stablecoin, the Terra ecosystem this year. We've also seen an EU regulation that we've also heard a little bit about, which, among other things, will seek to regulate stablecoins and has particular set of rules for stablecoins that are denominated in euros and other EU currencies. So this is going to be a pretty fascinating discussion, and we have exactly the right kind of people you'd want to talk to for it. We have Patrick Hansen, who is the Director of EU Policy and Strategy at Circle. We have Chris Hayes from Celo, who's the Head of Government Relations, and we have Jan Ceyssens, who is the Head of Unit responsible for digital finance at the European Commission, who hopefully will be telling us all about his triumph of agreeing MiCA. I mean, that's probably a good place to start this debate of the EU markets and crypto assets regulation, which isn't quite legislated yet, but as we pretty much know what it's going to look like. We've already heard a bit about it. I'd like to know, starting with you, Jan, what do you think that will actually mean for the stablecoin market in Europe, and how do you see the market now developing now that those rules have been agreed?
Yeah, no, I mean, I think it's going to be rather positive news in the sense that, first of all, there is now legal clarity. What are the rules actually for stablecoins? I think the MiCA framework also actually is a quite sound framework. Some people may say a bit conservative here or there, but I think it is at least a framework where we can also say it really implements also all the international, let's say, kind of standards on this. You've seen recently, indeed, some framework from the Financial Stability Board, which came out with revised recommendations. So I think we can safely say if you are MiCA compliant, you also meet indeed the international standards, and that's in a way a solid basis actually for the so-called stablecoins to indeed become stable as e-money tokens, as we call them in the MiCA framework. Because indeed, as you mentioned, I think we've seen earlier in the year that if there's no real stability inbuilt these constructions, then things can turn sour quite easily. And so we really think also for the market, honestly, the fact that there are now clear rules here, that basically it's clear there is a reserve which is backing stablecoins, that there's transparency about this, there are direct redemption claims. I think that will rather reinforce the solid projects which are around and which may still be around.
Yeah. Okay, so I mean, we've got two people we can ask about how they feel about that statement. That we've got legal clarity, so now you've got all you need for this market to take off. Chris, do you think that's is that how you see these new laws?
Well, I think what they've done with MiCA and Jan, his team, I think, been really thoughtful. So putting out a framework, trying to enhance security, transparency in the stablecoin market, which I think something that's been a challenge no matter what type of stablecoin design you have. And so I think thinking about that has been really positive. I think also leaving an opening for decentralized protocols to to reside outside MiCA, which is quite important. So when we talk about decentralized stablecoins, there is a path for them to operate under MiCA, maybe not labeled as a stablecoin, but there appears to be a real framework. So I think that's positive, and so we'll see how it develops. And much of that, I think, will rely on sort of the regulatory technical standards that are going to come out in level 2. And so, what does it mean to be fully decentralized, which is a perennial question in the crypto space? And then, secondly, what are the reserve requirements for an asset reference token? And what does a highly liquid, low risk asset look like? And the ESAs will be the ones that decide that. And so I think that'll be critical for, as we think about it in terms of decentralized stablecoins. And I'll let him talk more about centralized.
Right. Yeah. I mean, Circle is one of the few, I think maybe the only issuer of a major kind of euro-denominated stablecoin. Were there cheers or jeers in the offices at Circle when this regulation was agreed?
Yeah, I think there are a few other euro stablecoins as well, but obviously I think overall we're super happy that now there's a clear regulatory path in Europe that we can comply with and then that we can work towards. And I mean, Circle has been super outspoken from the beginning. Circle is a regulation first company. So, I mean, as soon as MiCA is in force and MiCA applies to everyone, we will make sure that we comply with all those rules. And I think overall, MiCA's 3 main goals are, setting regulatory standards, creating legal clarity, and apart from that, harmonizing the market and protecting consumers. I would say these are the 3 main goals. I don't know if Jan agrees, but and I think the end result is a great step towards that direction. And I would totally agree with Chris that with regards to the more practical concerns and practical considerations around, how to basically implement those provisions operationally into our business, I think a lot depends on the level 2 specifications. I mean, there's over 30 regulatory technical standards, I think, in MiCA that have to be specified now by the European supervisors. And I think a lot of MiCA's practical success, honestly, depends on those technical standards. But I mean, we're really looking forward to basically going down that regulatory clarity path.
Yeah. So as with all these laws, often the devil is in the details, and we have to wait and see until it's all nailed down. But relatively positive feedback there, I'd say, from the industry. I mean, I already mentioned the collapse of Terra earlier this year. And one of the interesting features about the Terra stablecoin was that it was based on it had reserves based on an algorithm. So there was a kind of computer program generating the reserve requirements. And this was supposedly the kind of new technique in decentralized finance that would show the way forward. It didn't work. It collapsed. The guy who founded it claims he is not on the run, but opinions differ. What do we learn from this experience? Because I've seen some people, like the Financial Stability Board, came forward and said, okay, algorithmic stablecoins like this just don't work. You shouldn't do them. Is that the right thing to have learned from the Terra debacle, or what else can we learn from it?
I'll jump in on this. I think what's unfortunate about the Terra situation is what we've ended up with in a post-Terra situation is sort of fiat-backed stablecoins, which I think people are comfortable with and understand: cash in a bank account, cash equivalents, mirrored and tokenized and put on chain, versus everything else. And unfortunately, everything else, which is a variety of different designs, have been dumped into this algorithmic stablecoin bucket. And I think that's problematic because there's a lot of different types of designs. Mento, the stablecoins that are native to the Celo platform, the Celo layer 1, fit into that category. But I think what's really important from Terra is learning that stablecoins should be collateralized. I think that's pretty clear. You need a collateralized reserve, whether that reserve is cash in a bank account or whether it's on-chain collateral, which we're seeing, I think, more traditional financial instruments come on-chain. I'll note BNP Paribas just tokenized a green bond. Maybe that could back stablecoins, right? So as we think about crafting thoughtful regulation in this place, I think it's really about having a collateralization of the stablecoin and the collateral level being adjusted based on the volatility of the collateral. So if you have a crypto collateralized stablecoin, you probably need a lot more collateral to deal with the volatility. Unfortunately, when you have Terra, you basically had a situation where it had one use to stick it in an unsustainable savings protocol at a 20% rate that was funded by marketing rewards. Those rewards couldn't continue to be paid. People dropped the token. You saw basically a run on the bank. And you had a reserve. I think they had a $5 billion reserve for 17 billion in circulation. So you ate through the Bitcoin reserve. And then, of course, there was nothing to prop up the token anymore. So I think if you had a fully collateralized reserve in that situation, it may have turned out differently, depending if that collateral could cover the risk and the volatility of over the stable coin.
I mean, Jan, you've been going on for some time, or on a policy basis of the importance of having reserves. Were you secretly quite pleased to have been proved correct by this stablecoin that didn't have enough reserves, showing the problems with that?
I mean, we should not now draw conclusions from one case to, let's say, to generalize them too much. I think, however, I mean, in general terms, I think our impression is indeed at this stage of development, if you make a promise that you have a clear reference stability towards an official currency, then you also need to have a reserve in that, let's say, which is in one way or another denominated in that currency. I think you can have all kind of different, let's say, instruments around, and you can have asset reference, tokens, which do not necessarily officially promise the stability towards a fiat currency. You can have unbacked crypto. I mean, Bitcoin is also around, and everybody knows that there's not much behind, so there's no problem for us to have algorithmic coins around. People just need to be clear about what is the promise they're giving. And if you give a promise that you are stable towards an official currency, then at this stage, our impression is that that also means that you need to have the necessary reserve for that.
Yeah. Okay. So there's different models around, but you just have to be able to fulfill your promises.
And maybe if I can add on that, maybe it's also time to move on from this term of stablecoins, which indeed actually is hiding many different animals, and they are quite different from each other. And maybe that's also why MiCA can be useful. I think we have certain labels now. E-money token will indeed be the single reference, single official currency reference tokens, and other tokens will be called differently. Basically, maybe so it's important to look a bit more in that sense. I would agree at the different shades of gray, basically.
Yeah.
Yeah, I mean, totally agree with that. I think probably the most important learning of the entire collapse, and obviously quite a lot has gone wrong with Terra. I mean, 40 billion have been evaporated over 48 hours. And for me, the most important learning is really that we have to stop putting all those different assets under the same umbrella, under the stablecoin umbrella, because those assets are just completely different in terms of regulation, in terms of their, prudential measures, of their backing, in terms of their technology use. So I think that's the most important learning, and I think luckily MiCA is trying to achieve that through different categories. And I think, I mean, I wouldn't say there's a need to directly prohibit any kind of asset, but it should just be properly communicated, properly branded. And we have to make sure that those kind of assets are not mingled and mixed with, like, for example, tokenized cash, how we call it, assets like USDC that are 100% backed by just cash and short-term treasuries, because those are completely different constructs.
Yeah, yeah. Okay, well, that's raised quite a lot of issues about, how to make stablecoins stable. Now I'd like to talk about the other aspect of the title of our panel, which is euro-denominated. So, we're particularly interested in that because the assumption is that people will want to pay for stuff in the currency that is widely used where they live. But most stable coins that we see on the market are denominated in US dollars, and there are some like your own, but they haven't quite seen the same kind of market share that US dollar stable coins have done. So I'd like to get all your views on why that is and what we can learn from the US market dynamic, and whether we might now start to see that change.
Yeah, I can kick that off.
Maybe it makes sense for you to start that since you're the fiat-backed stablecoin.
Yeah, essentially, I don't think there's a single factor that explains that discrepancy. That is obvious to everyone. I mean, the euro is the second biggest currency on earth, right? It's the second most traded currency. It's the second most held currency in foreign exchanges. As a foreign exchange at banks and central banks. It's the second most used currency internationally for cross-border SWIFT payments. And if you look at the stablecoin market cap, it's just roughly, I think, 0.2, 0.3% of the market. And that discrepancy is obvious to everyone. And I think there's several reasons to that. I mean, starting with the negative interest rates that have been talked about earlier already today. I mean, obviously that was a barrier to starting that reserve-backed business model. I think the knowledge that the regulatory clarity was missing was a factor. And at the end of the day, I think we have to acknowledge just the first mover advantage that a lot of those USD-backed stablecoins had in the market. If you look at where stablecoins are currently used, much of that market cap sits within those crypto native use cases, you know, trading at crypto exchanges or as liquidity within those crypto capital markets, also called DeFi. And if you look at those use cases, the first mover advantage and the network effects are just so huge that as soon as one coin, you know, manages to have, you know, a big standing and a big part of that market cap, it just makes sense for other people to build on top of that. What I think and what we think as at Circle is that we're slowly moving from that, you know, speculation phase where stablecoins are mostly used within those crypto native use cases to a utility phase of basically payment stablecoins, where those kind of assets are more and more used for real-world payments, cross-border payments, or even for treasury payments within companies. And I think as soon as we move towards that utility phase, we expect that, you know, European companies, European individuals will have more and more incentives to use euro-denominated stablecoins. So we expect that market to grow for sure in the future.
I mean, I would actually agree with everything Patrick said. I think as we move to a payments atmosphere, there's going to be much more demand for currency denominated in euros that people in Europe are using or sending remittances from Europe. I think what would be interesting is actually, if it doesn't look like it's happening anytime soon, if we did return to a negative interest rate environment, what that would mean for fiat-backed stablecoin providers. So the Mento Euro, obviously being a decentralized stablecoin, you don't have that the business challenge and cost of holding assets that may actually have to maybe earning negative interest rates, which they were up until recently in European banks. And so what are the implications if that environment comes back again about how those businesses could operate, since they mostly operate off interest income?
And I'd like to slightly turn that question around as well and ask, you know, does it matter if we don't have euro stable coins? I mean, what are we missing out on if this market isn't allowed to develop or doesn't develop for whatever reason? What is it that we lose?
Well, the payments aspect, I think, you know, that I think it has to happen, because as this moves from a crypto native use case where we're seeing most of the usage for stablecoins now, as we move towards fundamental payment infrastructure, you'll have more need to be able to convert back to fiat in euros rather than, and I know the euro and the dollar are very closely aligned in exchange rates now, but that might not always be the case. So.
Yeah, and also on top of that, I mean, and I think most people in that room believe that blockchain-based finance, that the blockchain-based economy will be quite big in the future. And I think it makes sense also just from a political perspective. And actually, the ECB has looked into that last year already to make sure that the euro as a currency, to maintain its status, has also a role to play within those new markets if we expect those to be the future of finance, the future of the internet economy, to be honest. So I think there's a lot of you know, political prioritization also of that aspect.
Yeah, we heard on the panel before about MiCA from the MEP Andrej Kovarik, who was saying, you know, maybe we went a bit too far with the stablecoin caps in MiCA, and he was talking in particular about small businesses and said, you know, maybe we were too harsh on small businesses because now only big companies will be able to take advantage of these rules. I wondered, Jan, if you were able to kind of respond to that concern, and you know, who do you think? Are we talking about banks? Are we talking about fintech companies? Are crypto upstarts going to be able to enter this market? Who do you see as the stars of the stablecoin universe?
Well, I don't want to second guess MEPs because they are the ones who indeed decided on the ultimate text. And I think Andre is an excellent, he knows this whole framework very, very well, actually. I mean, I think on our side, we really have to see now indeed how it develops. I think there, of course, I mean, you can have your speculations, and those of you who know the market probably better than me, you may have your own guess who will now be the ones who will come forward. I mean, certainly, I know that quite a number of people are looking at projects. I mean, I would add it is true that a stablecoin is now not. I mean, if you are a small kind of founder, it's not the first thing which comes to your mind. I mean, it requires a bit of probably preparation as well to do this. But I would not exclude that. I mean, there are some fintechs who can be quite successful with it, and then I think we have a number of e-money, let's say, tokens actually even under today's rules, under the e-money directive already, which are coming there. I know that I think that some of the banks will certainly also look at what's going to be possible, and I think from our side we only welcome. I mean, any project which is sound and solid. I think that's really the main point here, and. Yeah, I would tend to agree also with what the panelists said before, that basically under the current situation, I mean, I think I always like the euro to be used in innovative markets because I think the euro is a great thing in the end. Still, it's also still a symbol of Europe's unity, basically, which is quite important in these days. But I mean, in the end, it's not for us to decide what currencies the international markets use. Of course, the more the use of stablecoins is the real economy also in the EU. Indeed, the more, let's say, a very strong use of foreign-denominated coins could create question marks and also problems in terms of, well, for the users, honestly, exchange rate risk, and for financial stability and monetary policy also in terms of their effectiveness in a way. And I think that's where MiCA also again provides a quite good framework. I know there was a lot of discussion, well, how far can kind of foreign currency denominated stablecoins go? I mean, I think there is quite a lot of room for that. But indeed, at some point, if you become really big in payments in the EU, then I think the expectation is that you should also use the currency of the place. And I think that's honestly obvious. And I think no other jurisdiction would see that differently.
Mm-hmm. So, I mean, you're referring to the cap that MiCA places on the use of non-euro stablecoins, so stablecoins that link to the US dollar or whatever. I'm wondering from our industry participants, are you convinced by that there's room for fintech players, or are you worried that the bankers will just come in and take over as they often like to do?
We were actually just talking about this offline here. I think. Look, I think, as I explained before, if you're in the decentralized space, that's a different discussion. But I think, banks are set up to run this sort of system. They hold deposits. They are regulated, and financial regulators, EBA, NCAs in Europe are comfortable with regulated banks. They do that all the time. They already have a lot of market share. So it would be a natural for them to move into the space. And I know certain banks in the Eurozone have looked at these sort of stable coins. I think one of the main impediments is really this ability to build the tech to do settlement in a quick way between interbank payments. And that's actually where that wholesale CBDC could be really interesting as a way, we're just talking about this, to settle at the central bank in a quick time period. So being able to settle between master accounts at the central bank between different banking institutions when you accomplish a transaction. So I certainly think that it moves towards banks or entities that are partnered with banks in the future, at least in the centralized stablecoin market. That's my impression. But
yeah, I mean, as mentioned, I think it's obvious to many out there that privately issued stablecoins have found product market fit. There were over $100 billion issued of private stablecoins. At Circle, we have processed over trillions and trillions of stablecoin payments, and I think that's just a market development that has not gone unnoticed, and that's quite natural to me. So I would expect as well, like once we have regulatory clarity, that there's many other players, including fintechs and banks, that are looking closely at that market.
Yeah, sure. I'd just like to pick up on a point Chris raised there about the importance of decentralization, because for a lot of people in the crypto world, being distributed, being decentralized is what it's all about. That's the point of Bitcoin. That's why we're here. But clearly, you know, if an entity is decentralized and doesn't really have a kind of hub, it's quite hard to regulate because you don't know what to attach the regulatory obligations to. There's obviously a range of ways you can do this in the stablecoin market, how centralized you are, but where do you think the right balance lies? How centralized does a stablecoin have to be?
I can start.
I mean, sure.
Yeah, I think one problem that has, or one thing that has not been solved yet is the so-called stablecoin trilemma. You know, with can a stablecoin be at the same time capital efficient, decentralized, and also stable? So there's just different models out there that go different routes, and Circle obviously has prioritized from the first day the importance of being stable and capital efficient and super scalable. And a second important note on the topic of decentralization is the distinction between the issuer of the stablecoin and then the technological rails, the financial rails those stablecoins operate on. And what has always been super important to Circle as a company, that there's just rules-based open competition about the technological foundation on which those stablecoins operate. That's why Circle has, you know, issued USDC on 9 different blockchains, has announced basically the issuance of or the scaling on 5 more different blockchains. And we think that at the end of the day, these open, public, permissionless blockchain rails, this is the most important piece of innovation. And this is where, you know, the benefits of decentralization and an open market infrastructure really come to the fore, in our opinion.
Yeah, I'll jump in on this. I think, you know, we obviously understand the difference in benefits and drawbacks of centralization versus decentralization. I don't think for anyone in the Web3 community we have to cover those. I mean, you know, you have a centralized entity, you have more risk, right? The idea is to distribute the risk. I think when you think about it in the stablecoin concept, being able to scale up a currency quickly, so there's more efficiency with a decentralized stablecoin in some ways with on-chain collateral. It's really about that. So efficiency and cost to be able to scale up and build that rather than have the infrastructure you need for cash or cash equivalents in a bank account. So I think that will remain a distinguishing feature. The other element has really been around transparency of reserves. So obviously with on-chain collateral, even though that currently those on-chain collaterals are maybe more volatile because they're cryptocurrencies, we will see more innovation, as I pointed out before, in traditional financial instruments being brought on-chain. That is the more transparent in real time, being able to see what reserves are backed by what and how many stablecoins are in circulation. But now that fiat-backed stablecoins will have some sort of regulatory structure to require those audits to be looked after. I think with certain fiat-backed stablecoins in the past, not Circle, there's been some issues about what they're actually holding. And that's where decentralized stablecoins have shined. You may have less of that differentiation because you can have comfort that the regulatory structure around the reserve requires those assets to actually be there. And so maybe then it shifts more on the efficiency and how people feel about centralized entities versus decentralized entities.
Yeah, we're coming to the end of our time, but I'd like to just end with Jan on that point. I mean, do you agree that you've kind of parked decentralized stablecoins for the time being? Will there be a MiCA 2 that looks at decentralized stablecoins and figures out a different way to manage them?
Well, I guess you'll have a panel also later on, indeed, on DeFi in general terms. No, absolutely. I mean, I don't think that there is a very good way today to approach, indeed. I mean, how can the objectives of financial regulation be achieved in a decentralized, let's say, space? There's a lot of reflection. I don't think there are any perfect solutions. And that's certainly something which would require further, let's say, thought on. I would at this stage not, let's say, fear or hope too much for MiCA 2. I think the focus is now indeed to implement MiCA. That will already be a big enough challenge. Because, I mean, we just discussed also the technology element of decentralization, and I think it will be, to give just one example, for supervisors to really get familiar with this and see also what are the risks which I need to cover, which I need to understand, which I need to firms to understand. Actually, I mean, to just give one example is already going to be a huge work. So I think we take it a bit step by step, and this is now the first point. And I would not underestimate indeed the step which MiCA brings. also globally. I mean, the impression I had, I was 2 weeks ago now in DC, where there were a lot of meetings. I think it is really a quite significant step. So, I mean, we need to get this right also in the implementation, which brings us back a bit to what we discussed at the beginning.
Yeah. Okay. Great. Well, we'll wait and see how this happens and whether the euro stablecoin market really takes off. But thanks very much to all of you, to Patrick, to Chris, and to Jan for a fascinating discussion.
Thanks.
Thanks. Thank you.